All right, day 47 of my journey to a $500,000 stock market portfolio. So as you can see right away in my margin account, my equity dropped to 625. It's usually around 2,600 to 3,500. But now obviously with the markets dropping so hard, it's going to affect my equity. First thing, my covered call American Airlines stock is trading at 26 when it was around 28. So my Boeing put spread. So if you've watched my last video on put spreads, you'll understand that I'm going to be in a loss position in all my put spreads right now, but I'm not in trouble until it goes past my short strike. So Boeing, my short strike is 305. So as long as the stock is trading above, I'm safe. Right now, Boeing's at 316. But currently, I'm losing money on this trade. And it's got earnings January 29th, which could affect the stock in a big way. Hopefully, it doesn't drop below 305. But if it stays above its current market price after earnings, then surely I'll be able to close it because premiums will drop in value. And in any case, I've got until February 14th, so I still have time in this trade to manage the trade if it goes against me. Got box covered call trade. It dropped to 15.3. It was trading at around 16, 17. Dell was trading at 50. It's at 48. So all this is going to affect my equity. I've got two put spreads on DIA. One expires February 21st. The other one expires February 14th. So yeah, I've still got 24 days on one, 17 days on the other. But as you can see from this column here, I'm in a loss position. $100 here, almost $100 here as well. But my short strike on this one, for example, is 285. On this one's 282.5. And DIA right now is at 286. So it's very close, but still safe. Facebook, my short strike is 205. I've got two put spreads on Facebook, different expirations, but same short strike of 205. So you could see here, I'm in a losing position, but Facebook is currently at 215. So got 10 points still. Obviously, if the market continues to drop, then I can get in big trouble. We'll see what happens, but I've got two more put spreads on IWM, February 21st, February 14. So 24 days to go, 17 days to go, but they're both in a losing position. As you can see here, 147 minus 56, 90 minus 35 is my losing amount. And IWM right now is at 164, but my short strikes on both put spreads is 162.5. MasterCard, one put spread expiring February 21st, also in a loss position. My short strike is 307.5, but MasterCard is trading at 316. So that's the good thing about out of the money put spreads is even if I'm wrong on the direction, so obviously I was wrong because the market dropped, I still gave myself enough room to be wrong. Because when I placed this trade, for example, on MasterCard at a 307.5 short strike, MasterCard was probably trading in the 320s. So now MasterCard dropped almost 8 or 10 points, but I still have 9 more points to go before I get in trouble. Got a put spread on the Qs expiring February 21st at a 217 strike. This one's very close to Qs is trading at 218, so this one's pretty close. Now, yesterday I opened a new trade on the SPY expiring February 28th, so 31 days to go. It's already in a small losing position, but I sold 3 contracts at a 312 strike. So SPY is trading right now at 323.5. I went all the way down to 312 as my short strike, and I've got 31 days to go. So giving myself some room before I can get in trouble. I collected, I believe, 70 cents or 72 cents. Yeah, I collected 72 cents out of this trade. And then I've got some old SPY put spreads that hopefully are not going to be in trouble. But you can see my short strikes are 320, 319, 323, 323, 324. So the put spread on the SPY that expires February 21st is kind of in trouble because it's already lower than my short strike of 324. But because I have 24 days to go, I don't necessarily have to do something. Right now it's in a losing position of $100. I think 24 days to go is still a lot of time. I don't necessarily have to manage or sell a call against it. I think it's too early to do something. Give it some time. I've got a Tesla put spread at a 450 short strike. I think this is my only position with a profit right now, my only put spread with a profit, because I went all the way out to 450 and Tesla's trading at 562. Then I've got Uber, covered call trade. I want Uber to drop below 32 temporarily because my short strike is 32. And then I've got United States Steel. I'm gonna probably wait till after earnings to see what happens. Hopefully the stock goes up a bit so that I can sell a better call option against it. Right now, I don't know which strike to sell the call option at. My price is 18, the stock is trading at 9, so I'm 50% down on the stock itself. So there's no way I can choose an $18 strike. There'll be no premiums. So I'm gonna have to get closer, maybe $11. But then what if the stock jumps up after earnings? I might end up losing my shares at $11 while my cost is 18. So I'm gonna wait till the expected move of earnings and then choose a strike accordingly. In my TFSA, I have these covered call trades. Really nothing to do with them. They all expire, most of them expire February 21st, 28th, 21st, 14. Maybe Halliburton. Halliburton dropped below my strike of 22.5. So it looks like I'm gonna end up rolling the call option come February 14. I would like to get out of these trades because I want the capital to do something else with it. Teva as well is below my strike, which is safe, so really nothing to do there. My RSP, same thing. Bombardier dropped a little bit, 1.2. My cost is 1.82. Trying to get out of all these trades. Brands is at 20. My strike is 22.5, so I'm safe. Novavax, my strike is 15. It's trading at 8.5, safe. Square is at 71. My strike is 69, but my cost is 69, so I'm okay with that. I have two choices come February 14. I could either continue selling a call option at the same strike, or I can get my money back. I haven't decided yet, but I'm leaning more towards getting my money back. So getting out of the trade, selling it for $69. And Yeti, same thing. Either I'll continue selling a call option at the same strike, collecting a credit, a premium, or I'll just close the whole trade for $33 and get my money back. And in my RESP, nothing special. Stuck with Bombardier here. I do have some capital though in my RESP, about 7,000 Canadian, but I don't know what to do with it yet. Although with this market dropping, it could be a buying opportunity, but I'm just waiting to see if something is an obvious buy. I would like to do a long call option, a leap, like I did with McDonald's. McDonald's here, where I bought a 2-year option, a 2-year call option at a 210 strike. I paid $14 on January 2nd, and then 7 days later, so 1 week later, I sold it for $19, making a $500 profit. But of course, McDonald's moved from about $198 to $209 for me to make this winning trade. Right now, McDonald's around $210. So if it drops again below 200, I think it would be a good opportunity to repeat this trade. Or it doesn't have to be McDonald's. It could be another big name stock as well. It could be the market. It could be SPY or Q's. But I would need it to drop more for me to be more confident in buying it. I also have some capital in my TFSA. I'm really leaning towards doing a cover call trade on the Q's. But I'm gonna wait for Apple earnings, because if Apple drops hard after earnings, it's going to affect the Qs. So I'm gonna wait for that just to make sure that I get into the Qs at a better price. All right, so this was a quick overview of my portfolio. If you have any questions, leave them in the comment section below. Like always, if you're gonna open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Thanks for watching.